Awesome. Hello, everyone. I think by the time we got live on YouTube, I think we started right on time. That might be a first for at least first time in a while. Um, Thank you all for joining today. I know it's been a month since we did the last one. So sorry about the late notice last time. We had an important call that we actually needed Kelly for, as you guys can imagine. So that took precedent, unfortunately, for you guys over this live stream. But I'm glad we're back. It's nice to do this again. And we were going to get started here in a second. Looks like some people dropped off, so I'm going to give them a second to get back on. But while we're waiting on that, I'll bring on Kelly, and then we'll probably get the disclaimer out of the way as well. So, Kelly, how are you?
I'm hanging in there, dude. I can't see I can see. Oh, there. I don't see you yet, but I'm doing well, everyone. And thank you, Lee, for restarting the AI Circle. I know it's been a while, and I did get called away for various reasons for the last time why I couldn't make it. So I'm very sorry.
No, it's all right. I mean, shoot, I've had to move some around as well. So, between traveling and important meetings and such, it's sometimes hard to balance two schedules, but it could be worse for sure.
Could be.
So I was just gonna before we get to the disclaimer, I know last time we had this was April 9th. I happen to remember the date because that was when Trump announced the tariff pause on China, and gosh, the market, it felt like couldn't be more in the toilet back then, and it's done everything except that since. So I'm sure you have a lot of exciting stuff to share today.
Yeah, we do. It's a matter of fact, we missed that April 9th area. We were near the lows, and then we had a really, obviously, over the last 3 weeks, we've had essentially no other way to describe it, a pretty incredible rally back up to flat on the year. We're down just 2% on the year.
Yeah, they must have heard we had an AI circle that afternoon, and that's why Trump did what he did, right?
I wish he told everybody our company first. I would have executed on behalf of everyone, even though obviously we're not allowed to do it, but it would have been nice.
Right.
It says to people, it's like, hey, the market's going up.
Right.
Maybe that is insider information.
No kidding. So I'm going to read the disclaimer here in a second before we get started, but I haven't seen anything in the chat yet. Someone could just say hi, or as always, if you guys have any questions you want to get in there, feel free to do so now. We tend to get a lot at the end, and I hate that we have to sometimes not answer them all. So if you guys do have questions, feel free to get them in now. And with all that being said, let's do the disclaimer. So iFlip Investor Inc. and iFlip Financial Services are not financial advisors and do not make buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk, and you should speak with your CPA or financial representative to ensure the iFlip Smartfolios that you select are suitable for your investment profile before trading in a live brokerage account. And I see about 5 hellos in there, so awesome. Welcome in, everybody. I just wanted to make sure, you never know sometimes with technology in this day and age. Sometimes who knows if my microphone was cutting out or if the stream wasn't working right. So thank you all. And Kelly, I think unless you have something you want to start out with, I'll turn it over to you and we can get the screen share going.
All right. The screen should be up for everybody.
Yep.
All right, here we go, everyone. I'm going to switch things around so I can keep an eye on the screen for my eyes. I think the best way to look at the last month since we've had the last AI circle is as the market earlier this year went into the trials and tribulations of the trade tariffs, back to the trade wars that we saw in the first Trump term. The market, of course, collapsed. But the market was actually moving down literally in the middle of February before it hit any of its lows in early April. As I glance a little bit to the right, it's because I'm looking at the chart to make sure I've got my timing right, even though I kind of know. The market literally a month ago looked really in dire straits. We all knew that. We saw that the market was near its lows, literally down about 16, 17% on the S&P. The NASDAQ, however, was down literally over 30%. And the big tech, the Mag 7 stocks, is the way I look at them, were each and every one outside of Netflix was down somewhere between 25 and 30%. Most all of those stocks have completely recovered. Which is kind of a testament to tell you the value of the language that comes out of our government and or our Federal Reserve. Nothing moves the market more than the government itself, which is like fiscal things that are part of the government's budget. If the budget changes, that's going to change the value of stocks. If interest rates change via the Fed, for example, that's going to change the value of stocks. Those are the only two things that ultimately change the value of stocks: perception of what government and or the Federal Reserve is going to do. A month ago, it looked like the Federal Reserve was trapped and that Trump was going to fire Powell, and Powell might have to raise interest rates because of fear of inflation as a result of the tariffs. All of that news seems to be gone now. There is no such news like this anymore. Firing Powell is out. The market, of course, has recovered. Companies, the UK has made a deal with the US. China is which is the most important country that needs to have a deal with the US because they're our biggest trading partner, next to the Euro community. Now has a 90-day pause, a little less than that now. And during that 90-day pause, of course, the markets exploded higher as a result of that. And this last Monday was the reason for that. The 3,000-point rally that I wasn't able to do an AI circle for a few weeks back was a result of all of a sudden, guess what? We're going to put delays on all of the tariffs. And once that came out, actually, that was the catalyst to make the market move higher. Yes, it came down a little bit after that, but that was really the ultimate buying opportunity. That movement down after the huge 3,000-point rally. So right now, when you look at things politically, it looks very favorable. When you look at things interest rate wise, that's a little less favorable. We have a 10-year note that is at 4.5%. The only fear is that there could be inflation and maybe Powell would raise rates. But from raising rates maybe a month ago for fear of inflation, now, believe it or not, the rumor is that it could be a Fed rate cut later this year. Now we understand kind of aggregate-wise why the market is higher. Less tariffs and a possible cut, which is in interest rates, which is the kind of the most favorable view you could ever have of the stock market. But does that mean we should just go in and buy the house in stocks? No, I don't think so. This is Donald Trump. He may make things better over the next 3 years and 10 months or so. However, there will be more volatility. This was his nature in the first term. I expect more of the same in the coming 3 years plus. That means that I think if I'm a trader, I'm going to be nimble. I'm going to take profits if I can. I'm going to take the stocks that I think have good long-term prospects, especially if they're more insulated from trade. Stocks like that, I'll give you an example, would be like Planetaire. Planetaire is a technology company, or a CrowdStrike, technology companies that are kind of necessary to run certain kinds of operations on databases, regardless of the economy. So those are stocks that have recovered and actually both made new highs from being literally down over 20%. Those are stocks that were easy buys at a lower price. But when you're trading with a computer system, you can't, it's not like my experience could override that. I'm not an investment manager, as we all know, and we are a software company. And the idea of a software company is to use the software for guidance. That's what we've signed up for here. Let's kind of go through the markets real quick so you can all get an idea. What you're looking at here, if you can see it, hopefully, is I'll make it longer. This is the S&P 500. I always like to start at the COVID pricing. Believe it or not, this was COVID. This little blip here was COVID. That little blip was a 33% down. This blip we just had was only 17% down in the S&P. Why? Well, obviously it's a much higher price. We've more than doubled since COVID. So if the price is doubled, it takes larger moves to move down more, but it feels the same because the wealth is different in the country. People that are in these markets have made enormous amounts of money over the last 5 years. It's doubled, but anything that doubles in 5 years, that you could do basic math and know that's 20% a year. And we know we had a down year of 20% almost in 2022. So the market's moving higher. It's moving higher for a number of reasons. Essentially, basically lower interest rates, huge amounts of money that were pumped into the economy during COVID. All of that is now kind of come to roost. And where did most of that, a lot of those dollars go outside of obviously a lot of probably corrupt government programs? They went into the stock market. And when they go into the stock market, prices go up. You're looking at the S&P. I'm going to zoom it out so we see it a little more granularly. This was right here where my mouse is. If you could see it, this is about the beginning of the year. You could see that's exactly where prices are now. We're literally, essentially, call it flat, down 1% on the year. Maybe after today, up a half, who knows? We're just flat on the year. Our all highs, however, we're still about 2% off the highs. That's all we are off the highs, just 2%. Because these are the highs. We're right there. This is the S&P. There is no other market. If we look at the NASDAQ, almost the same story. The NASDAQ is actually up a tiny bit on the year now. And it's literally the same 2% off its highs relatively. The move down in the NASDAQ, though, was quite significant. It went from 22,000 all the way down. I remember this low print. I was on vacation to just under 17,000. So it lost 5,000 points. That's 24% on a huge index. And I could tell you if it wasn't for Netflix, it would have been down about 30%. Because most of the stocks were down huge. If we look at the dollar real quick, we should. Where is that? There we are. Look at the dollar since the beginning of the year. Here's the dollar there. The dollar is definitely weakened. With the recent rally up, the dollar is strengthening. A weaker dollar, though, is generally not the worst thing in the world for America. It does help with certain ways that when we not when we buy things, but when we sell them, it does help. So, but also it's in a range. I expect the dollar to ultimately recover and stay in the trading range it's been in literally for years. In other words, I think the dollar will actually strengthen over the coming months. Interest rates, here, the real secret to the whole move down in the stock market was the story of the interest rate market. If we look at the 10-year note, when the market was really sliding lower, like it was here, you would expect the interest rate futures to go way up in price. In other words, the Fed's got to cut rates to protect the market. What happened and what changed the whole thing, if you kind of remember that those perilous times, was that the interest rate market actually started to go down in price. In other words, the yields went up. Why? Because if we have trade wars, the fear was nobody would buy our bonds. If they don't buy our bonds, then we can't finance things. If we can't finance things, that kind of brings government to a halt. That was when Scott Bessent went to the president and said, we really have to do something on the tariffs to alleviate the fear of an interest rate sell-off. In other words, they were going to sell For example, the Chinese could sell all their bonds. The Chinese are the single biggest holder of the U.S. bond, 10 years, and even short-term treasuries. If they were to sell them because of their fear of holding American assets, that would bring interest rates literally way higher, and that would be very damaging to the economy. So, however the government maneuvered through this, I don't think it was extremely well, no matter what the pundits say. But they did navigate through it, but it was from the help of the entire cabinet to keep things to be where they are. And actually, it's worked out, when you look at the net of it, very, very well so far. Let's go to the Mag 7 real quick. We're going to pop through them so we can get into some Q&A earlier than normal. Apple, look at Apple's movement. Again, Apple to me is a stock in decay, but it's basically made lower lows. And actually, the recent rally here has not impressed me that much. The company is great. I still think it'll find its next innovation, but I think the jury is out. Notice it's below its 200-day moving average, even after a very significant rally off its lows. Amazon, a very similar situation. It had a huge move down, again, around 30%, a big move up, approximately recovering half of its loss. Nothing to say here. I'm not optimistic or pessimistic either way on any of the Mag 7. This was a fear I had, though, coming into the year, that the Mag 7 were the most vulnerable. Google, again, this doesn't look to me, even though we had a good day today in Google, this doesn't look to me like a stock that I want to run out and buy and think it's going to make new highs. Again, below its 200-day moving average, it must be noted. Netflix was, of course, the main performer. Sorry, this is Meta. I'll go to Netflix first to make it easier. Netflix is at new highs. Notice that even after the sell-off that we had in the lows of April, yeah, Netflix made a low, never went below its 200-day moving average, which is the orange line here. And now it's at new highs. That single-handedly kept the NASDAQ from being down further. Microsoft. It's just hard for me to believe that it's almost back up to its old highs, around $4.50 a share. It was a huge bargain. Around 380 was the number I had. It literally touched in the 350s. To me, that was a bargain. Unfortunately, our systems didn't catch that bargain. And then, of course, we had that monster explosive day up after we understood what the trade wars were really going to be. Finally, NVIDIA. Again, here's another stock. I don't like it. Again, this is why we have systems. It just crawled above its 200-day moving average. I don't like NVIDIA for a fundamental reason. I do feel that the DeepSeek product, once it's completely understood, and sadly it's not understood by most money managers, they just need to believe American companies do everything best. I get it. I'm a patriot too, but there is better technology out there, software-wise, that overcomes the need for NVIDIA product, a lot of the NVIDIA products. I'm not sanguine on this stock. Finally, I'll go back to Meta. Meta, again, was obviously hurt badly by the tariff wars, but it has had a good recovery. This is essentially like what they call a 618 Fibonacci retracement to where it is now. Again, I have no aspirations if it goes higher or lower. But here's something we should note, everyone. We have been and will be getting into a lot of our core portfolio positions again, right in these areas. So even though the market has rallied quite a bit, our software did not buy the low. Yes, it did get out of a lot of its products, but it will, if it hasn't already, it will be getting into a lot of these positions again over the coming weeks. So just note that. We'll quickly move on. Oil, obviously, from the hits from the markets, essentially from the beginning of the year, is down significantly. We came into the year closer to $75 a barrel. We're now at about 62 is all. That is obviously a significant change. If we just go to the pipelines, they have actually been hurt. These have been my favorites, as everybody knows, for many years, because they pay big dividends. And now they pay bigger dividends at cheaper prices. I still feel these stocks go to $24 a share. This is Energy Transfer, and the other one is All Plains American. They're priced extremely similarly. And I do think these stocks literally go off the charts above here over the next year, year and a half. And if that's the case, these are still great stocks, I think, to pick up. Our systems remained in these stocks throughout the turmoil. Now we're going to jump around a little bit to look at the real movers. Look at Goldman Sachs, everyone. Goldman went from 660 all the way down to below 450. $200 a share hit, 33%. Again, recovered more than 2/3 of that. So again, very close to the highs in a good looking stock, I think, in this area. And it's a banking stock. I like this stock here. I'm going to show you things that I think are interesting for thought. Again, no, let me hold back. Let me go to CrowdStrike real quick. CrowdStrike is, again, a technology company, like I mentioned. This one and Planetaire. Here's Planetaire. These they went down after for whatever reasons, from the tariffs and possible kicking out Jerome Powell, but they have recovered. This one has made a new high. CrowdStrike just barely didn't print the new high, but it got right there, and we priced itself right on, and it's right there now. These are stocks that are less concerned about the movements of trade wars and interest rates. They're less sensitive to them, and they have performed well, and they look to be good bargains. The market thought so of themselves. Here's ones that I'm kind of eyeing right now. It's back to the cruise lines. Look at Carnival Cruise Lines and Norwegian. They're trying to come back. They have had a huge hit. They went from 28 literally down to 15. That's overdone. And why? Because if they think there's trade wars and inflation, nobody's going to have the money to travel. Saw a thing earlier today that said that the cruise lines from Carnival to Royal Caribbean, they have the largest bookings ever, are currently are ready for people to travel. Given the bookings and given what we just saw in the trade wars, even with an uncertain economy, these stocks, even though I have no system for them, these stocks actually look pretty good right now. And if I was a pontificator or wrote a newsletter, these are things that I would be suggesting to buy and be not just nibble at. I would be buying them thinking they have a chance to return to their old highs, which is in many cases up, literally 50% higher from here, literally sometime later this year. That's a guess on me, and just note that. Other stocks that have recovered, I'm going to jump all the way to Bitcoin in terms of the EBIT. Look at this. Again, it wasn't just a trade war. It was the conglomeration of things. This is something that basically was trading here at the beginning of the year, right where it is now, about $100,000 a coin. Literally went down, I remember, into the 78,000 a coin, down 22%. Now we've recovered. We're very close to our highs again. And as everybody knows, I'm bullish Bitcoin for a zillion reasons. And the newest reason, of course, is that Trump has poured his personal money into this crypto space. And I don't think he's wrong. I think this is where a lot of the future lays, as much as it's a change to everything that I've known in my own lifetime. So I'm bullish still on the cryptocurrencies. This particular Bitcoin, remember, I've always been about Bitcoin. Tesla, we got to look. I don't know what to say about Tesla other than I think Musk obviously is getting a raw deal. The raw deal was, of course, the actual fanatical hatred towards the man when he's helping Donald Trump. It showed in his stock price. If I was not an investor in Tesla personally, because I never really liked the volatility of Tesla. And it's also very hard to model. So when you try to model something or use even AI intelligence to do so, Remember what AI does, it builds models. If the computer can't build a model that works, who's to say I can do that? And I couldn't. It's too volatile. And here was an example. I mean, Tesla was at 440 towards the beginning of the year, and it lost half its value. It's on its recovery now. Elon Musk will leave. I suspect Tesla will go a bit higher. I'm probably bullish on it for the long run, but I personally just can't buy it here, even though it does look good. It looks like it wants to go another $50 higher, at least. And it will recover. It's almost recovered about half of what it's lost, interestingly enough. Other stocks that kind of went through all of this, and I'm going to finish with this and go into Q&A. Other stocks that really did well through all of this take a look at these. The telecommunications. No matter what happens, we still need our cell phones. So if you look at AT&T and you look at Verizon, they weren't part of the volatility. Yes, they moved up and down, but it was more on the news. Every down move was met by buyers. Look at this one here. I remember this one. Huge move down, bought it. Huge move down, bought it. Huge move down, bought it. Here it's touching 200-day moving average. I think the market for AT&T and Verizon, I think they're kind of topped out in here. This is the prices I remember from literally 4 or 5 years ago. The real value to these stocks is the dividends they're paying, and they're paying pretty nice dividends for the price of the stock. This one's paying about $1.10 a year, and it's only a $26 stock. It's paying about a 5%, 4.5% dividend. Not bad for stocks that are not going to collapse. I think, Lee, we can go from there. Oh, one last thing, I guess, and then we'll move to some Q&A if there is any. The stocks that I really have been, that I've tried to model, and I have come up with some models, are these infrastructure stocks like Land Bridge or Texas Pacific or Digital Realty Trust, which is this one here. These are stocks that I think do well in the building of data centers. This is a place where I believe to be. However, during the move down and even prior to it, they were extremely hurt. In other words, do we really need data centers if we're going to have high inflation and everybody's doesn't know what's going to happen next? No. So they really sold these stocks off pretty hard, down 20, 25%. They're on a recovery. I expect them to further recover. Landbridge has done the best. It's basically near its highs. If it breaks out of this area about $80 a share, and we can trade $83 a share, look for it to go to 100 to 110 from there. Similar with Texas Pacific, which I personally like. Again, this is something that has been trapped in this range. From Christmas, we had this huge run up. Then we came down. We have been in a range mode in Texas Pacific literally since January. Texas Pacific, if we can get it above 1400, 1420, it goes back to the highs, which is in the area of 1750 and maybe all the way to 2100. That's where I expect it to go in the years to come. Other than that, I'll mention two other things. I always think of them at the last second. The portfolios that did well, Vector, our newest portfolio, Vector, did very poorly in the first quarter of the year. It's had a huge move back up in the second quarter, which, by the way, we're only a month and a half into, and so I think that's up almost 12% area. Actually, from being down, I don't know how much was it down, Lee?
I think actually because March I think was okay. Like you brought up a lot of them, CrowdStrike and some others that had pretty strong recent months. I think it was actually ended up pretty break even in Q1, and then it's been up around double digits in Q2 already.
Yeah, and keep in mind where that comes from as I tighten the screen up. Where it comes from is vector literally is a vector. In other words, it has magnitude and direction. That's the definition of what a vector is. And the magnitude direction, if you look at the components in there, they're all modeled. The components are essentially infrastructure, data, water, electricity, things that, again, what is the infrastructure of America? You used to think, water, electricity, roads, but now it's about data. Data is part of our infrastructure. And that's really certainly being evidenced by what has to happen in the FAA. So the reason I liked Vector and built it was the theme is right. And guess what? You can model the stocks. That's even better. Modeling means it's not me choosing things. It's essentially a collection of things towards a goal. And that had a very good performance. And of course, here's the true end, everyone. BitFlip, obviously BitFlip did what it was supposed to do on the way down. The market did go down 22% or so in the crypto markets. Someone alerted me that we did lose money as crypto went down, and then we were able to make extra money as the market went up because we got fully long. And if you look at your portfolios in BitFlip, you'll see they should be at their all-time highs or very close to it, depending on where you got in. And on that note, Lee, I spoke for about 20 minutes, so I think we can do 10 minutes or so of Q&A.
Yeah, well, I was gonna just touch on Vector and BitFlip, but you remembered them right then, so perfect. But kind of Kelly and I were talking about this right before we hopped on, but like I think of BitFlip, obviously it's one of our unique smart folios, not only in that it's invested into a crypto type product. I guess it's technically a stock, I guess, but my point being, like, the way that I explain that smart folio is that how it's 50% always invested, 50% managed by the AI. Like, in a perfect world, if crypto is falling or tanking, whatever word you want to use around it, hopefully we'd only be half invested. The AI would have us out. In crypto, or Bitcoin more specifically, in Q1 was down around 10.5 to 11%. I looked at mine; it was down 4.8% in BitFlip. So pretty much exactly half. And then we actually entered the market again, or entered IBIT again, to start the Q2, and it's, I think, up about 25 or so percent, and that's exactly what Bitcoin has done since the start of Q2. So I know we talked last time about a SPY trade, but gosh, that's pretty remarkable. If you can limit the volatility of an extremely volatile product and participate in a lot of the upside, that's pretty sweet. And we've actually seen, and I don't even know if you know this, Kelly, but someone told me before we hopped on, there's about $1 million that was added to BitFlip in the last week. So people saw it get to 100 again. They're like, man, I need to be a part of this.
I think I obviously like hearing that, but I'm a person that likes to buy value. If I'm trading for myself, I buy value because I believe that things are going to be around in the long run. Generally will go up. So if you see them go down and you have cash, you're probably better off buying them. These the secrets, and not secrets, the things that I learned being around desks and large traders in my career was they have conviction. The word conviction is powerful. If you believe in something, then you're going to always want to buy it if it gets cheaper. And then if you're just trading it, you want to always sell a little bit of the extra you might have when it gets, at new highs or someplace where you feel it's stagnating, knowing that if it goes down even a little bit, you'll buy it back because you don't mind carrying certain shares at a loss when you really believe that the overall direction is up. I feel that way about certain stocks right now that I think you can just own, and you just own them and you're going to be fine. If you could trade them through and have management around them, though, it's even better, because at the end of the day, you just never know if the market decides to really go down and then stay down like we had in the financial crisis. Then the opportunity is overwhelming if you have cash and the markets become cheap. It is impossible to have an advantage if you stayed in the stocks the whole way down, because now you have no opportunity. You just have lower priced stocks. You don't have any cash to buy them cheaper.
Praying for him to go back up.
And you're now in the position of prayer. And if I'm in genuflect, it will be because I'm in a church.
So we have a couple questions, and we're going to wrap this up in the next 10 or so minutes. So if you have any final questions, anyone, please get them in soon. I'm going to start with the most recent one from Chris, and I'm going to keep your screen up, Kelly, because you might want to share a screen for this. It's about the SPY, basically asking, and I would speak to this if it's in Europe. Much better person to answer this than I am, but basically talking about, why didn't the system buy the S&P on the recovery except for that quick trade that we made at the start of April? So I brought this one up first. I think it's a good.
It's a great question.
Yeah.
I'll tell you a very simple reason why. It depends. Previous trades, a lot of times you get, if the market makes a bottom, let's look at it actually specifically here. This is, I think if everybody remembers, the day we got our signal was this day here, literally. See this day? The big one?
And just to pause real quick, if you guys can't see at the bottom, we're looking at about the last 2 months or so.
Yes.
So the left side is right around
the day
March.
We had our trade to buy was, I think, around April 9th. Take a look at what happened on that day. And here's the difference. The way the product works, prior to the AI taking control of the risk, is when the market, if you get the market and you get a profit in it, the concept is to say, hey, I don't want to risk all, any of my profits. So I keep a very, very tight stop. But that stop is based literally on the highest point it's achieved. And this is the algorithmic portion. Remember, the algorithmic portion holds the trade first. That's why, if you kind of remember, when we put that trade on, it came off a day or two later. And the reason is because the market, look what happened the very next day. The very next day, we printed much lower on the day at one time. Here, I'll actually change the graph. It's a real good question. And I really looked at that following day. I think our exit trade was literally here, the day or two after. But do you see this low print here? It was around 511 on the S&P. What happened is when you put the trade on, it saw the huge rally. It was almost a 10% rally. And what it did is it said, wait a minute, that's a huge rally. We got to put a stop where? Well, if I put my stop just 5% below, half of it, it was here. Well, the market touched it literally the next day, triggering a sell signal even before the AI could grab it. It was because of the volatility around this huge day that it didn't allow us to keep that trade. In retrospect, of course, I would have loved to have everybody and tell everybody we're owning the S&P, down in the, 500 area. And it's now sitting at the high 500 area, up almost, 18%, literally in a month. We've done that before, but in this particular case, because of the volatility surrounding the day we put the trade on, we got pulled out of it. And I really looked at it to see, is the code wrong? No, it was right. Is the AI, can the AI do anything? No, the AI never had a chance because of just the nature of it. That being said, I do believe we do own, pardon me, everyone. We do own the S&P, I think, as of this morning. Whether we like it or not, at this price level, I certainly would have loved it down where we first grabbed hold of it down here. Now, unfortunately for us, I guess we own it higher. But I can tell you,
easy to play armchair quarterback.
Yeah, right now I am saying, maybe I shouldn't have, changed quarterbacks and took Staubach out for the other guy because, Staubach was having a bad day. I just couldn't, first of all, I'm not allowed to do that from a legal standpoint, but all I can do is investigate that we are running our products correctly. And I would have loved to have held that trade. The bottom line, though, I can tell you, here's something else everybody should know. whether we get a signal, one day before, the day of a signal, or even the day after the signal, really doesn't make that much difference historically. Ultimately, what we're trying to do algorithmically is buy things to hold on to a trend. If you notice, most of the things you own are things that have been in trends. That's one of the reasons earlier I mentioned it's so difficult to write product in code around Tesla, because it's hard to map. Why? It has a trend, but the trend is extremely volatile on its way up. It has huge 50% corrections frequently. That's very, very difficult to manage. So that was the reason for the S&P. Just so you know, though, S&P signals are generally the best signals we got. And if I had to put any of your children's money on a product, and it was my responsibility with a gun at my head, I would put them in the S&P, and I bet you they would thank me, as a benevolent uncle when they became older.
And to step back, and Chris, please don't take my armchair quarterback as a dig or anything. It's just, of course, it's easy to look now and be like, man, I wish I had that the last month type thing. But as Kelly kind of started all of this with, like, the market's about where we started the year at. We're a couple percent off the all-time highs from February. And because of the couple trades we've made, we're still ahead of, I believe, of what the market has done for the year. So go ahead.
And I'll add one more thing to Chris's point. If we just didn't get this extra volatility the way the data showed up the day after the huge move, we would have still held the S&P. But the difference is there was a tremendous look. If you just look at the day that we had that one trade, that was our signal. You can see why our signal is literally looking at the formation here. If you can see the formation yourself, you can see these downs, a low, a recovery, not a lower low, a little bit higher high, and same thing, not a lower low, another high.
Yep.
This is what we bought here, but the volatility in the position. It's just the way it works. There's been previous times historically where it did the same thing, where it said, I wish I would have held it. But
it's all right. All right. Kind of quickly, that took more time than I expected. And it's not a bad thing by any means. It was all good. The short of this question is oil pricing in the energy sector moving forward. You talked about Plains All American energy transfer. But I guess I can read the whole question. With the Trump's executive order on farm and dependence on petroleum for creating, how will this affect oil price in the energy sector?
Well, we all know that oil prices should be coming down. Sadly, they're not coming down fast enough for me here, living here in Arizona. I expect oil prices to be lower. They are from Trump's presidency. If we just go to the oil chart here's the price of oil. So Trump became president here. Oil has gone from about 72 to 62. I expect the oil prices to kind of sit around between $55 and $65 a barrel, really, for the remainder of his presidency, because he does want cheaper oil. I think he'll even go after it to try to make it cheaper later. But what does that mean? Doesn't mean I really want to own, say, Exxon, even though it's a good company. The pipelines offer something different. The pipelines represent the infrastructure of their company. So what is the value of their asset? Well, the value of their asset is all the pipelines themselves. They were built 20 years ago, 30 years ago. These things may have cost $2 billion to build 20, 30 years ago. $2 billion 30 years ago is probably worth $20 billion today. So what's happening is, if the infrastructure is used over the long time, it has a lot more time to amortize, and yet take a look at the amount of value of their infrastructure. The infrastructure itself makes the stock worth $24 a barrel, or sorry, $24 a share, if not more, if we were to just try to sell it today. The fear is, of course, over time, is that, hey, the infrastructure will be worth zero if we go completely electric. And I don't expect that, frankly, in my lifetime. I see these stocks participating right now in the short run over the Trump presidency to at least $24 a share. And that is a full 50% higher than where it is, and it pays 8%. So yes, even into what we perceive as a storm of lower oil prices, I still like these parts of the energy sector.
Oh, my internet was going in and out. I'm sorry, guys. I think you just ended. Sorry, there was probably an awkward 10-second silence there for you, Kelly. Sorry about that.
No, it was only 3 seconds.
Perfect. Better than 10. There are a couple other questions. I'm going to actually pause this and bring them up next time. I know I have a meeting in a few minutes. I know Kelly's got somewhere to be as well. So I'm going to write all these down, and we're going to start with them next week. Or excuse me, not next week, in 2 weeks. Speaking of, next AI Circle will be the 28th. So 2 weeks from now, same time as always. Thank you all for being here. Like I said, the couple of you that asked the questions at the end, we'll get to them next time. Honestly, because they were good ones and they'd take too long, and then I'd be late and someone would be mad at me. So Kelly, thank you as always for all the insights. Everyone, thank you for joining us tonight. Have a great rest of your week, and we will see you back in a couple weeks.
Thank you, everyone. Thank you for being Flip customers. Thank you so much.
Awesome.